again, this is Antonio, and I'm coming at you with another exciting video. Many of you have watched the video I did in the past where I discussed Sundial Growers, and I discussed whether this was a stock that you should continue at being bullish over, or was it time to cut ties and become bearish on that stock. So without further ado, I wanted to make a follow-up video because my motto on this channel is if I see the news, I want to report on that news. So without further ado, I would like to start off by saying that this is not financial advice. If I see the news, I report on the news. And without further ado, let's just go ahead and discuss Sundial Growers. Let's talk about the condition of the company, because in the past video I did, the company were making some structural changes. But now let's discuss some of the structural changes that they have already done at the beginning that they are doing. And let's talk about these stock forecasts in the future. So without further ado, let's jump on in. I'm gonna read some of this article by the Motley Fool, and let's just get going. Meme stocks have a reputation for being bad buys. However, there's nothing that says a popular penny stock can't leverage the fervor of retail investors to help it become something more formidable. Case in point, the much maligned Sundial Growers recently took advantage of his Wall Street bets driven share price surge to issue a boatload of new stock and warrants, thereby raising enough money to completely change the trajectory of the company. And we talked about some of the changes they want to make so they can stay in business. Currently, a business that is focused on growing cannabis for sale in Canada, Sundial is now in a position to go global, but not in a way that investors might expect. It's departing from its roots by getting into banking for the cannabis industry, and that is out of the left field pivot goes as management hopes there's a healthy chance that it could pay off big for shareholders. All right, banking may be boring, but for Sundial, it beats watching the grass grow. Sunscreen Bancorp, this joint venture Sundial announced in March with Canadian alternative investment management firm SAF Group, aims to make money by issuing loans and investing in cannabis companies and marketable securities. While details are still scarce, it's clear that there's a significant opportunity here, offering financial services to businesses in the U.S. marijuana market can be quite attractive, as many of the cannabis cultivators they are unable to access traditional finances due to the restrictive federal regulations. Likewise, small and medium-sized cannabis businesses worldwide will benefit from easier access to funding. Sundial's initial commitment to the venture will be around $188 million for a project it calls the Special Opportunities Cannabis Fund, but that might be just the start. How could such a move make sense for a company that's primarily built around growing and selling cannabis? In fact, it's not as crazy as it might seem, because Sundial is already operating like a cannabis investment bank. Last quarter, its $96 million in loans and investment yielded $15.7 million in revenue. For reference, its gross cannabis revenue was only $11.7 million, down 30% compared to the prior quarter, while only 2.8 of its investment revenue was from interest payments of fees. The rest came from realized and unrealized changes in the value of its marketable securities. It's important to recognize that the company's pivot is just starting. All right. The key to maintaining and expanding the investment revenue will be Sundial's war chest of basically $1 billion in cash in equivalents. That's a tidy sum, and $752.7 million of it is unrestricted. There are two reasons to believe that this unrestricted cash balance will be used aggressively for lending and the purchase of investments. First, the company has no outstanding debt. So the money is earmarked for repayment, isn't earmarked for repayment. Second, in the words of CEO Zach George, we do not plan to pursue top-line advancement without profitability nor the maintenance of market share at any and all costs. So the moves that Sndl is making, they're trying to please us as the investors in the company. So I like the moves that they're making, and this article is not over. Let's talk about some more of the ideas that they are doing. All right. In other words, that pile of cash probably won't be used to find a massive scale up in operations until there is a near guarantee of producing greater returns. All right. The company's pivot toward investing has a few important implications for shareholders and potential buyers. Most importantly, investment revenue will now be marked as revenue from operations. That exposes the company to additional risks and fluctuations in the market prices of its holding could prevent it from selling them to make money. It also tends to make the accounting a bit wonky. In its most recent earnings report, Sundial had a net loss of $134.4 million, but $129.9 million of that net loss was a result of changes in the fair value of the company's derivative warrants. There wasn't any actual cash impact, so investors will need to read the fine print rather closely moving forward. All right, but will it be good for shareholders? In a word, yes. And this is where they're trying to get us to double down and invest more. And let's keep going. While the market for cannabis products is crowded, the market for cannabis financial services is much less busy. That is especially true in the US, which is the marijuana mega market of the near future. As few as 1 in 30 banks and credit unions in the US will accept a cannabis business as a customer because marijuana remains illegal at the federal level. This may eventually change, but in the meantime, Sundial is ready to step in to address at least some of the gap between the financing cannabis businesses needed and what they can actually secure. Remember last quarter, Sundial made more from its investments than it made from marijuana sales. It hasn't even deployed the majority of its capital yet, and Sunscreen Bancorp is just barely getting off the ground. That bodes well for the company and the stock over the next year or so. Nonetheless, Sundial still has a lot to prove about its merits as a cannabis investment bank. If it can continue to reliability turn its cash hoard into investment revenue and scale up its efforts, it will become totally different and better. A company than the clunky cultivator that it has been. So while I wouldn't bet the house on it, Sundial definitely has the potential to significantly enrich investors who buy its stock now. All right, so let's dive over here and let's talk about Sundial Growers. Their position now is $1.05, and let's talk about how with the changes that the company make, this is how the coin price forecast feels about Sundial Growers. They say mid-year it's going to go up to $1.51. By year end, $1.60. By the end of 2022, $1.86. And by 2023, $2.24. So basically, for this stock to double in value, you're going to have to be in on this play for possibly 2 years. So you know the motto over here is do not invest money that you are not scared to lose, because every stock is not a pump and dump, meaning you're not going to make money right away on every stock. Sometimes you got to get in there on it low, stay in it low, and then ride the wave up. And if you do that, there's a great chance that you'll be in position to make really, really good money with Sundial Growers, but you may have to be in on this play for quite some time. So without further ado, this is Antonio with Team Tiggio. Please like, comment, and subscribe to the channel, as we'll be coming to you with more videos just like this in the future. And without further ado, we will see you next time.